Greetings everyone. Welcome to the last video of Financial Freedom playlist, which is one step to taste the success of financial freedom. Senfil is a facilitator in this journey, and our goal is to guide you to taste the nectar of financial freedom. Here are some scary facts about financial literacy. Listen tight. Number 1. Many adults worldwide lack basic financial literacy skills, with many unable to make informed decisions about their finances. Number 2. People spend an average of Rs 47,300 in late fees, overdrafts and fraud-related charges. Number 3. 1 in 5 teens lack basic foundation to build on for financial literacy. As a countermeasure to these fearing facts at our Financial Literacy Hub, we have come up with a few tips.
Firstly, draw down a budget. It is a foreseeing and forward-looking activity. Here are simple ways to create it. Determine your income, track, categorize expenses, and set financial goals. The flow of budget is income, expenses, and financial goals. Together, they form a budget. With the help of this outline, determine how much money you need to allocate to each category. Now that the budget is set, monitor and stick to it. However, remember, budgeting is a continuous process. You need to adjust your budget as your financial situation changes.
Set financial goals. We all set out to a destination without a goal, which will be a never-ending journey. Life is futile without goals. Also, there is a saying in the management context, failing to plan is planning to fail. Therefore, set a goal and then leap forward. Determine your current financial situation and identify financial priorities. Your financial goal should follow the SMART framework: specific, measurable, achievable, realistic, and time-bound. Determine the action and decisions required to achieve that goal. Continuously monitor progress, identify gaps, and fill them then and there wherever they arise.
Debt traps are rat traps. Be cautious about them. The two best ways to clear existing debt are debt consolidation and debt repayment methods. Firstly, debt consolidation. Do not apply for specific loans such as personal loans, gold loans, LAP, loan against property, or short-term business loans. Just get with a single loan with a decent interest rate so it becomes easy to manage your debt and reduce your overall interest charges. Secondly, debt repayment methods. Follow the industry-specific methods to pay off debts, such as the debt snowball method. Here, loans with the lowest interest rate are waived off and followed by the next lowest in the list. As we roll our money, more giant snowball comes with hefty interest rates. Nevertheless, this method gives immense pleasure and relief from the debt payment and can feel rewarding. Debt avalanche method. This is the opposite of snowball, where high interest rates debt are paid off and followed by the next ones. Here, the focus is on loans that are more expensive in the long run. Over time, we pay less.
Effectively control expenses. Remember this rule. If any good, commodity, product or equipment is broken or worn out, try repairing it rather than replacing it. Try figuring out the worn out part and estimate the cost of repairing it. When the repair cost is less than the value of the piece of equipment, you should repair it. When the repair cost exceeds the goods value, you should consider replacing it. By this way, you can effectively control your expenses.
Invest wisely. Your financial future may hamper if you make unwise, ignorant investment selection. Only invest your money after thoroughly analyzing the risk and grasping the investment potential on a personal level. To that, consider these following points. Diversify. Invest in various asset classes of companies from various markets and industries. One may ensure that even if certain stocks underperform, the gains from the other stocks will substantially make up for it. Inflation-beating investments. If you rely too much on safe investments like saving accounts, bank FDs, and government bonds, your portfolio will generate returns that are lower than the rate of inflation. Thus, start investing in ways to beat inflation, including mutual funds and inflation index funds. Respect the market. Do not time or overpower the market when investing. Respect it and receive whatever it wants to lend to you. If you spot a trend, get on it and ride till it lasts. The trend is your friend.
These are the various ways to avoid financial mistakes. One can tweak it to the risk tolerance capacity and financial goals. Now the entire team of Senfil congratulates you since you have covered all the 4 steps, implemented them and achieved financial freedom. With these, we have achieved our goal. See you soon, viewers.